Veer Maheshwar Charitable Trust Latur organizing daily international webinar series. In this series, the speakers are invited from India and abroad. And today we have invited Dr. Vardah Saghir Madam, who is Assistant Professor, Department of Management, SMBS, Jamia, Hamdard, New Delhi. And her topic is Beyond Banking, the New Dynamics of India's Finance. I welcome you, ma'am, and welcome all the participants, those who are joined you here. And I request you, you can start your speech now. Thank you.
Thank you, sir, for providing this opportunity to speak on this topic beyond banking. I really reciprocate that you have invited me for this session. Let me just quickly go through the PPT, and is this visible to everybody? So the topic of this session is Beyond Banking, the New Dynamics of India's Finance. And the word beyond banking reflects the transformation from the traditional banking to the new way of delivering financial services. So we have moved from those traditional banks which were involved in only lending and depositing money to a host of services which are being provided to customers today as per their growing expectations and the robust regulatory requirements today. So, first of all, before I delve into the topic of beyond banking, let me just introduce a bit of what is financial system. Financial system is a network of banks and financial institutions which are providing financial services to customers. And they can be banks, they can be non-banking financial companies, they can be mutual funds, stock markets, or money market instruments. So all these are financial intermediaries, and they are setting the framework for a robust financial system. Now, this financial system is simply channelizing the funds from the people who have the funds to the people who don't have the funds. That means they are simply transferring the funds from surplus units to deficit units. And this particular small diagram shows that the ones who are having the funds are being channelized to the ones who are not having. So, for example, the savers, as earners we save, and the money that we have saved, since we are saving, so we will fall under the surplus units. And the one who needs a loan, that will be a part of the deficit unit. So when I save my money in a bank, the bank channelizes my savings to the one who is in need of loans. So simply it is channelizing the funds from the surplus units to the deficit unit. So every country has a financial system, and it depends how strong or resilient the financial system is. So maybe when we talk about India, we are talking about the Indian financial system. Let's say if we are talking about Malaysia, it may be the Malaysian financial system. So particularly this financial system is helpful in mobilizing the savings. Number two, reaching out to those sectors of the economy which are in need of loans. And number three, since it is involved in investments, so it is actually increasing the economic growth of the country. So these 3 points are mentioned here: mobilization of savings, allocation of funds to the most productive sectors, and finally, capital formation, which is leading to the economic growth of the country. Moving next, now coming to the topic beyond banking. So as I said that there has been a change in the financial landscape today. The financial ecosystem is changing, and this rapid transformation is because of the ever growing customer expectations. Customers' expectations have been rising over the years. Number two, there has been robust regulatory mechanisms in place, right? And number three, we are going towards a cashless economy. And therefore, we are moving forward to a new era of providing financial services. We are in no longer need of those traditional banks or institutions which were working on the model of deposits and loans. So we are just moving past that. And that is why we are referring to this concept of beyond banking. That is, we have moved beyond those traditional banks, which we were hearing for the last so many years. Now, what comprises of this beyond banking? What falls under beyond banking, or how we have evolved? We will be seeing through in the next few slides. One way we have evolved through the years is the presence of non banking financial companies. These non banking financial companies, like Bajaj Finserv, or for that matter, Tata Capital, or let's say Shriram Finance. So these are complementing the activities of the banks. They are more or less providing the same type of activities which the banks have been doing, but they are a bit different, and they have emerged as a most crucial pillar of India's financial system. Why? Number one, they are targeting those segments which are somehow ignored by the formal banks. For example, they have been targeting first time loan takers. Number two, they have been targeting MSMEs, micro, small, and medium enterprises. They have been targeting startups. So, banks are more or less not providing loans to such segments because uh, for banks they require, let's say, 3 years or 5 years of financial statements, and these entities somehow fail to provide. So non banking financial companies are targeting the niche segments. Number two, they are providing faster and flexible operations. There is a speedy dispersal of loans, easier ways of getting loans, and they are not that time taking which the banks have been doing. And of course, they are a catalyst for digital lending and fintech collaboration. They have been collaborating, they were the first in collaborating with the financial technology platforms. So we can say that non-banking financial service companies have been emerging as a critical tool of economic growth. Now, many non banking financial companies which have achieved a turnover of more than 500 crores, they are also called by the government as too big to fail. That means they are systemically very important for the Indian financial system. Those which have a turnover of more than 500 crores. The next dimension of looking at beyond banking concept is combining finance and technology. Today, fintech platforms have combined finance and technology, and they are technology based digital systems that provide financial services through web and mobile applications. And this includes three segments: fintech lending, fintech payment, and neo banking. These are the three terms which we commonly use or commonly include when we talk about fintech platforms. Now, as the data says, the combined value of fintech segments, lending, payments, and neo banking have crossed $820 billion in year 24. And if we look at the constituents of the fintech platforms, lending tech was around 34 trillion rupees with a cumulative annual growth rate of 22%. Payment tech with 29 trillion rupees, CAGR of 17.5%, and neo banking 5.6 trillion rupees with a CAGR of 18%. So if we can look at the growth of these platforms, this is simply startling. Now, coming to the constituents of the fintech platforms, this is a small graph which highlights the fintech ecosystem. Now, when I talk about fintech, it simply refers to two things have been added together. Those companies which have come up with two things. One is finance and the other is technology. So when technology meets finance, we call it as fintech. So fintech based companies are using technology for providing financial services. Now, how do you divide this? How do we divide this fintech ecosystem? Three ways: payment, lending, and neo banking. When you talk about payment, we have UPIs, that is the Unified Payment Interface, where the services are being provided through mobile applications. It can be in the form of wallets, it can be in the form of cards or QR codes. Then we have lending platforms, we have digital loans, BNPL, buy now and pay later, or P2P, that is person to person. And neo banking is the digital only platforms. I would be discussing this in detail in the next few slides. Now, when you talk about payments, lending, or neo banking, all three, they all are catering to a large market today. And they have come up or started achieving the objective of financial inclusion. Financial inclusion simply means ensuring that everybody in the country comes under the ambit of formal financial institutions, whether by way of opening an account or or taking an insurance policy. Everyone must come under the ambit of formal financial institutions. They should not be taking money from money lenders. Rather, they should be taking from formal financial institutions. That is what is called as financial inclusion. So these platforms have actually been achieving the objective of financial inclusion. Now, when I say payments, fintech payments, they are high transaction volume and data. Over the years, if we see, the number of UPI transactions have increased, the volume and the value of these transactions have been increasing. Lending, lending is adding to the credit creation and revenue, and neo banking is simply leading the way of integration of financial services. So we'll be discussing this in the next few slides. Now, digital payment platforms, which are part of the fintech platforms, they are fast, secure, and cashless transactions. And they include UPI apps, mobile wallets, and payment gateways. And they have become a core of financial infrastructure, fueling trillions in transactions and reducing dependence on cash. So they have been leading the way to a cashless economy, a digital economy, and a cashless economy. And if we look at the data, UPI alone accounted for 261 trillion rupees worth of transactions in the year 24-25. And the total retail digital payment is at 83.7%. So this is enormous, and the share is huge. So digital payment platforms have been leading the way. Now, if we talk about the digital lending platforms, they provide instant personal loans, MSME loans, and BNPL. That is buy now, and you can pay it later in the form of installment. These are services being provided by certain platforms today. And among the digital lending platforms, we have one Credit B, and we have Lending Card. These are two companies which are offering loans, MSME loans, and BNPL services in the form of platforms, in the form of digital lending platforms. Now, this type of lending, of course, ensures that the product delivery or the loan delivery is fast, as against those traditional system where we go to a bank and take a loan and it takes, let's say, weeks to get it approved, and then we have to take many documents with us and all. So this is a platform. This is a lending platform where there is faster delivery of loans. Now, in the fintech platforms, apart from the digital payment platforms and the digital lending platforms, we have wealth tech platforms and insurtech platforms. Now, wealth tech platforms manage wealth digitally. So, among the services that is being offered by the wealth tech platforms, we have mutual funds, stocks, bonds, robo advisory services, and goal based investing. So they are high net worth individuals, and they are being provided services as far as their wealth is considered, that how they should invest it wisely in the most in the assets which can give them the maximum returns and all. And apart from this wealth tech platforms, we have insurtech platforms where insurance distribution and claim processing is done digitally. So there are various apps and platforms which are offering services related to insurance, like faster onboarding, customized policies, and quick claim settlement are the products or are the services they are being offered through the insurtech platforms. So when I say fintech platforms, we are mostly talking about the four major platforms. One is the digital lending, then the digital payments, and third is the wealth tech platform, and fourth is insurtech platforms. The next part of fintech platforms is neobanks. Neobanks are also growing up today, and these are financial companies that are similar to banks. They work like banks, but they have no physical branches. Unlike banks, which have physical branches, there is no physical presence for neobanks, and they offer customized financial solutions fueling their growth further. And some of the new banks that have been over the years we have been seeing is Fee, Jupiter, Frio, Zigzug, and Neo. These are certain banks which don't have any physical branches. So this is a concept which has been growing in India now. Now, among the evolving growth of banking system or financial service industry in India, there is a growing rise of embedded finance. Embedded finance is the practice of integrating financial services by digital first non financial firms. Now, here, without the third party intervention, we are paying directly to various apps. For example, grocery apps like Blinkit or Big Basket. So instead of taking a third party help, we are simply making the payments through their apps. So that is embedded finance. Then certain cab payments, you go to I mean, move through cabs and pay the cabs like Uber and Ola, and we are making the payments directly to them. So they also fall under the embedded finance. So there is no involvement of any third party providers. So this is again something very innovative and something which has been seen over the years. Then we have in blockchain, and blockchain technology is a distributed ledger system where the information is not centralized, or it is not at one place. Rather, same set of information can be seen through the various computer nodes or terminals. So there's no single central authority which is capturing all the information. Rather, the data or the information is maintained across a network of computers, which we prominently called as nodes. Now, with the help of this blockchain technology, there has been renewed banking efficiency in banking operations. KYC, that is the know your client sharing, is pretty easier, and fraud reduction is seen, and settlement efficiency. So overall, the efficiency of transactions, the efficiency of dealing with people has particularly increased with the help of blockchain technology. The next innovation in banking sector or financial sector we have seen is the emergence of CBDC, that is the central bank digital currency, or e-rupee. This CBDC is a digital form of currency issued and regulated by a country's central bank. So in India, in our case, RBI is regulating this central bank digital currency, and it is issued by RBI, and this is called as digital rupee, that is the e-rupee. And this rupee has the same status as that of physical cash. The cash that we are using, it has the same status as the physical cash that we are holding. And as I said, that it is issued and regulated by the central bank of the country, RBI. It can be used for both retail, that is the public can use it, and it can be used for wholesale purposes, that means the banks can be using among themselves. And it operates through a digital infrastructure such as a blockchain technology. So this is also emerging, quite in its nascent stages. It has still not been active, but yes, over the years we are expecting that RBI will start coming up with regulations pertaining to the digital rupee. Though this concept is not yet established, technological ecosystem is engineered finance. That means there's a cohesive collaboration between tech, data science, data analytics, and risk. So we have come up with certain technologies or certain products, we can say, that are customized according to the needs of the people. That has been that has been created using innovative technology, right? And the risk factor has been taken into account. We call it, particularly we call it as bespoke products. Bespoke it means customized products, customized solutions. So we are no longer dependent upon those CIBIL scores that the financial institutions have been using over the years. We have been hearing that if the CIBIL score is more than 700, we'll be able to get a loan or a business loan or anything. But today, these institutions, they are relying on engineered finance. They are looking at each individual's risk or credit history. The risk assessment is being done, and finally it is being decided that whether the loan has to be dispersed or not, or how much loan is to be dispersed. So own ways or alternative credit appraisal mechanisms have come in place through the engineered finance. We see another very innovative and something which can come under beyond the banking framework, which is called as open banking or account aggregator framework, and it lays the framework of an equitable regulatory ecosystem. In this, a digital layer where banks and fintechs share consumer data with their consent. So the consumers can share their data to these fintechs, and then these banks and fintechs, they share the consumers' data in order to provide them various kinds of financial services. Now, this particular initiative of account aggregator framework, where the consumers willingly are providing their data to the fintechs, and the fintechs and the banks are sharing the data with each other, helps in providing quality products and services to the consumers. And particularly, it is driving the objective of financial inclusion, wherein everyone, even from tier 2, tier 3 cities, rural areas, they are coming in the fold of financial inclusion. Everybody is being touched with modern financial system, modern financial institutions. Now, with this account aggregator framework, where the data is being shared openly, it helps in providing customized solution or customized financial products like instant loans, savings plans, and insurance to the customers. And of course, since the data is shared between the fintechs and the banks, or between the non-banking financial companies, this helps in speeding up the dispersal system, speeding up and reducing the cost of customer acquisition. So this is something which is very creative and very innovative in the India's financial system. And this system of account aggregator framework is called as open banking. Now, as I said, that this evolving regulatory landscape is marked by open banking and account aggregator framework. So, with the help of this option, consumers can also find out easy credit options. So, this is something, an innovation in itself, very important and very helpful for new to credit customers, that is, customers who have never availed any loan in the previous years and they are new to the system, so they don't have any credit history, no record. So for them it is very important, by just sharing their data with their consent, they can avail credit options. And this will also pave the way for improved financial services. So open banking is leading or is a game changer in financial changing financial landscape. Now, we look at evolving partnerships. How today the traditional banks are no longer competing with the fintech platforms. There is no competition, not at all. There's no competition simply because gone are those days when the traditional banks were competing with the foreign banks, or maybe with the NBFCs, or maybe with the digital platforms. No, they are simply collaborating today. They are coming with partnerships. They are coming with long term partnerships of providing quality products and services to the customers. So these partnerships helps banks modernize and offer digital first class services. And with the help of such a collaboration or such an arrangement or such a partnership, fintechs gain scale. They gain the trust and the regulatory support. Financial aggregators simplify and unify access to various financial services, and we have seen the that various partnerships have emerged. For example, ICICI Bank and Paytm. Paytm has come up with a partnership in lending and UPI payments. Then Axis Bank and Razorpay collaboration for merchant payments. Then we have another example, HDFC Bank and Cred. They have collaborated as far as the credit card repayment is concerned. So today we are seeing digital banking, and this is made possible with the help of collaborations, with the help of increasing partnerships that is coming up between the fintech platforms and the banks. This is supplemented by the artificial intelligence and machine learning. Today, several large incumbent banks have been striving for digitalization, and they are thus lowering the processing and interest cost while ensuring superior customer engagements. So they are taking the help of this machine learning with the help of various AI tools to provide or to offer superior services to the customers. Now, looking at the new business models and partnerships, in continuation with what I have just said, that there has been a growing partnerships with the banks and the fintech platforms, and these partnership-driven models includes the following services. Number one is banking as a services. We call it as BaaS, where banks provide back-end capabilities and fintechs handle the customer engagement. So there are two people, they are collaborating, two entities collaborating with one another. On the one hand, the fintechs, they are simply engaging with the customers, and all the back-end support is provided by the traditional banks. So this is called as banking as a service model, BaaS model. Second is the co-lending model, where NBFCs and banks share the risk and underserved areas more efficiently. For example, banks cannot take more risk because we all know that banks in India, they are part of we are part of the Basel Accord, and according to which we must have healthy balance sheets. We must have a capital adequacy ratio of around 9 to 10%. So banks cannot take that much of risk. So in that case, the co-lending model helps, where the NBFCs and banks collaborate with one another. And banks, sometimes they have asymmetric information. They do not have complete information about the rural areas, about the semi-urban areas. So in that case, the NBFCs provide them with data, and banks, if they have branches, then they can provide loans to such a customer. So this way the market size can be increased. Similarly, at many places, NBFCs cannot give the funds, so the banks cannot give the funds, so NBFCs in that case can provide the funds. And this is mostly seen in microfinance, where microfinance are small loans that are given to the disadvantaged people, or maybe to people who want to start some small business or anything like that. So in that case, the non-banking financial companies can reach there, because giving small loans is at times costly, and banks cannot afford to have such costly services. So there, at those places, the NBFCs can make their mark. So this is something, a collaboration. Banks and NBFCs are collaborating, they are co-lending, and this model is called as the co-lending model. Then we have come up with payment banks and digital lenders service financial access points, especially in the rural areas. So we have payment banks also coming up, and these have been, they are focusing on deposits up to rupees 2 lakh. Then we have small finance banks also, which are something called as mini banks, mini commercial banks. They are also into deposits and lending. But however, it is to be noted here that payment banks cannot lend. They can only take deposits up to rupees 2 lakhs. Now, next is artificial intelligence, embedded finance, robotics, or maybe AI, ML, they are playing a very instrumental role in the transformation of India's financial services. And in the last, to summarize this particular slide, if I say breaking the monopoly of full service traditional banks and spreading financial access deeper into the economy, that means no longer we have those old traditional banks. We have diversified the operations, the same set of services, of digital payment transactions, which is evident from the data. And primarily the digital payment transactions, this increase is driven by the role of UPI. The UPI transactions have reached around 16.85 billion with a value of 23.49 lakh crores rupees as of October 2024. This was the latest data that I was able to get. So yeah, so one big thing that has come up in because of transfer because of technology is this transformation of financial services. Now, in continuation with this digital acceleration, we see improved digital banking infrastructure because of technology only. And just the way we have unified payment interface, which we call it as UPI, we have ULI also, which is coming up. That is Unified Lending Interface. And the purpose of this ULI, or Unified Lending Interface, is to make the credit or the speedy dispersal of loans. So, especially in those sectors like MSMEs and the rural borrowers, where there is still the need for quick dispersal of loans. One challenge, we were doing a survey in our university, and we found that we were just talking with a few micro, small, and medium enterprises, their owners we were talking to, and we got to know that the biggest challenge they were facing was related to working capital finance, that they are unable to get the funds on time. So, with the help of maybe the unified lending interface, this problem would more or less be resolved. That is faster and cheaper delivery of loans. This would be again a major breakthrough in the Indian financial system. But yet to come, just the way UPI is there, ULI has yet to come. Uh, then digital banking infrastructure. If we talk about anything digitally, of course, there would be certain challenges associated with digital banking infrastructure. And one of the major challenges that is coming up the way is the cyber crimes. So we read every now and then, we are going through these news that there has been digital cases of digital arrest, or cyber crimes, or frauds, or maybe phishing attacks. These are very rampant and common now. So now banks are equipping themselves with modern technological solutions. They are upgrading their traditional algorithms and conducting awareness initiatives and periodic audits, which can improve their data privacy and security. Again, many fintech, they are collaborating with many fintech giants, and they are providing these fintech giants are providing them with technology which will help in preventing cyber crimes. And of course, with the help of technology, with the help of a better digital banking infrastructure, better risk management practices would be in place. Now, why risk management practices are required? The biggest challenge today to the Indian banking sector, or probably to the Indian financial system, is the rise of non performing assets. Non performing assets simply means that banks have given the loans and they are unable to recover it back. So, when you have better risk management practices, better KYC initiatives, or better processes to check that how the loan is being used and why the loan is being disbursed, then it would lead to reduction in the non-performing assets. And if at all the non-performing assets will reduce, the banks would be more profitable and healthy, and there would be better credit flow in the economy. So, better risk management practices are essential for leading for reducing the non-performing assets. And improved digital banking infrastructure is possible only when we can integrate artificial intelligence and machine learning today. So, with the help of technology only, then we can improve the services. And faster processing. Naturally, the best outcome of technology is faster processing. Loans would take less time in being disbursed, or maybe provision of various other kinds of services, not only lending and depositing, but any kind of services. When we are talking about bills of exchange or factoring services or merchant banking services, everything would become faster with the help of a digital banking infrastructure. Now, having talked about so many things about financial innovation and what kind of services, what kind of innovation has come up in the financial system, and what is this beyond banking concept, that we have left those traditional banks and we have come up a long way in providing innovative services as per the customer expectations. Let us see how these services would make the foundation for a well functioning financial system. Now, with these kind of innovative practices, innovative services, innovative products, there would be completeness. That means whole range of financial institutions, instruments and markets will meet the needs of the customers, will meet the diverse needs of customers, will meet the ever changing needs of the customers. Two, operationally efficient. So we will be providing, with the help of these innovations in the financial system, products which will be provided to the customers will be cost effective. They no longer will be at a cost, so they would be cost effectiveness. And the third is informational efficiency. With the help of this broad range of financial products and services, markets will see whatever information is there, it would be reflected in the prices. There would be complete transparency, there would be no information asymmetries. Everything would be transparent, the assets would be rightly priced with the help of informational efficiency. So this is how a well functioning financial system will work. So with the advent of financial products, services, or maybe embedded finance, or where UPI, ULI, so there would be a complete and a well functioning financial system. So this is how the innovation would lead to a well functioning and a complete financial system. Now, what this means in practice. Now, if we have so many innovations in financial system, uh, consumers, what who gets what? The question is who gets what, or who benefits from this type of a financial system, which is no longer dependent on those traditional banks. Consumers gets faster, digital, and more tailored financial services. So we as customers would be getting much faster, technologically efficient, less costly, customized financial services. For businesses, especially the micro, small, and medium enterprises, they get alternative credit and financing channels. So they are no longer dependent on the banks for getting the funds. They have various other alternative credit arrangements through which they can reach out to the customers. Then we have investors who can access more diversified products beyond banks' fixed deposits. They can invest in a plethora of other opportunities and investment avenues. And fourth is innovation. Innovation flourishes with data driven finance, AI enabled services, and platform banking models. So, innovative banking products and services would be offered to the customers. Now, this transformation reflects a shift from monolithic banking. Monolithic banking refers to a banking system where only banks are there, where only the traditional banks are leading the way. So gone are those days when we had a monolithic banking system, and we are moving towards a system where diverse, digital, and inclusive financial landscape is there that integrates many players and services to meet the modern economic needs. So this is because of the transformation. Now, looking at the regulatory and the structural shifts. So, we have digital payment frameworks. And as far as the RBI is looking into the regulatory and the structural part of the Indian financial system, they have come up with digital payment frameworks. There's whole lot of regulations on the digital payment setup system. Then RBI is giving a license to new bank forms. They have come up, they have given license to payment banks, they have given license to small finance banks. Many microfinance companies have recently been converted into small finance banks, like Bandhan is one among them. And then opening up of cross-border investment and foreign banks. So we have been inviting for cross-border investments, giving licenses to foreign banks to start their operations in India. RBI has also encouraging market-based financing, that is equity and debt markets, and not just bank loans. And these shifts definitely would make the system more resilient and diversified. And we no longer would be uh, just dependent on the monolithic system of banking. Now, continuing with the governance part only, that how RBI is leading the way, RBI has also come up with a bank soundness index, which will help the banks to monitor their financial health and support their transitioning to new fronts. So banks can be listed or ranked in terms of the bank soundness index based on the five broad parameters like asset quality, liquidity, then their solvency and all. RBI has constituted an 8 member committee to prepare a framework for responsible and ethical enablement of artificial intelligence. So, we are using artificial intelligence in mostly every activity today. Now, the question today and a major debate going on in many sectors or in many areas, the entire academics is taking up this debate that whether AI is ethical or not. So, in that case, RBI has constituted this committee to look into this aspect of ethical issues in AI. The regulatory sandbox introduced by RBI also allows the financial market players to evaluate and experiment new products in a supervised environment and expanding the access to digital financial solutions. So they can through this particular activity or particular program, they can come up with new products, new services, and they can find out whether this particular service can make an impact on the uh, on the way they are providing the services. Now, the next three parts that remain here, that how this transformation is going to help the Indian economy. Number one, increased accessibility of banking services in India. Now, with the help of this transaction, there would be increased access to banking services in India. That means this type of innovation or this type of creativity or this type of change would lead to financial inclusion. This is the first benefit of this massive transformation. Number two, the second benefit of massive transformation is improved service delivery and operational effectiveness. So we would be having better ways of delivering the products, the financial products and services, and this will also lead to efficiency, increasing efficiency of banks and other financial institutions. And third is our financial institutions like banks or maybe insurance companies or maybe mutual funds companies or maybe the stock broking companies, they are going to be more resilient and future proofed now. Now, by way, when I say resilient, it simply means we will be absorbing the external shocks in a much better manner. Now, when we talk about that 2007-8 US subprime crisis, it was said that many economists were of the view that Indian economy was least affected, though we were affected. And in a globalized regime, we cannot say that any of the country is not affected by a global recession or a depression. But yes, if we see, Indian economy was by far the least affected economy during the 2007-8 subprime crisis. So our this transformation from traditional banking to innovative banking would lead to number one, financial inclusion, number two, improved service delivery and operational efficiency, and number three, it would make the financial system more shock proof, more resilient. So, this is how the transformation would drive the Indian economy in the future. Now, how do we conclude this? The financial sector in India has already embarked on its journey towards Viksit Bharat. And today, our aim is to become a 3.88 from a 3.88 USD trillion economy to a 30 trillion USD economy by 2047. So this is the aim of Viksit Bharat for banking sector. That is 9 times we have to increase our GDP. We have to move from 3.88 trillion US dollar economy to 30 trillion US dollar economy. 9 times we have to move ahead, and for this the transformation is immense. The transformation is required. If the banking sector is not transforming, then this GDP won't be we won't be able to achieve this kind of GDP. So to achieve the aim of Viksit Bharat, we need to have this type of a banking system or this type of a financial system which can meet the ever changing needs or ever changing expectations of the customers. The current landscape and readiness of the banks and financial institutions, they will provide a head start for future advancements along with building required competencies and outreach activities. And banks must come up with suitable frameworks, more regulations, clear roadmap and milestone that how to achieve this 2047 objective of a Viksit Bharat. So, with this, I end up this session on beyond banking and how the financial landscape or the financial ecosystem has been evolving over the years. Thank you so much. And if you have any questions, you can please put up.
Thank you, ma'am. Now the session is open for the discussion.
Yeah.
Participants are requested to unmute and they can participate in the discussion.
Yeah, you may please ask the question.
जयवीर सिंह जी आप बोलिए।
आप सभी को नमस्ते। मैडम मेरे दो सवाल हैं। एक तो फाइनेंस सेक्टर है, इसमें अधिकतर जो क्लर्क पोस्ट पे आते हैं जैसे 12वीं पास आते हैं। अगर हम विद्यापीठ विश्वविद्यालय की बात करते हैं तो हमारा अगर सभी क्षेत्र को देखा जाए तो 12वीं पास एक क्लर्क होता है, एक प्रोफेसर एक अध्यापक क्लर्क के सामने खड़ा होता है। और 12वीं तक अगर मैच्योरिटी देखें तो बहुत कम है आज के आधुनिक युग में, क्योंकि उसको इतनी नॉलेज नहीं होती। तो आप इसको फाइनेंस के दृष्टि से कैसे देखती हैं कि इतना कम शिक्षित व्यक्ति वो फाइनेंस को संभालता है? एक तो ये सवाल है। दूसरा मेरा सवाल ये है कि जो फाइनेंस अगर आपकी पासबुक से में एंट्री होती है, आपके अकाउंट से पैसा कट गया तो वो तो हमें मालूम पड़ जाता, आपको मालूम पड़ जाएगा, लेकिन गलतियां कहाँ होगी कि जो हमारा पैसा बैंक में रखा है उस पे हमें जो ब्याज मिलता है वो सही मिल रहा है क्या? उसको तो कंज्यूमर को मालूम ही नहीं आता, कस्टमर को जो भी ग्राहक होता है, क्योंकि सिर्फ पैसे का हम लेन देन देख सकते हैं कि उन्होंने हमारा ब्याज कितना दिया, ठीक है, वो सही है गलत है। तो इसको इन दोनों चीजों को आप कैसे देखती हैं?
As far as this employment is considered, related to your first question कि 12th class का स्टूडेंट या फिर एक पास आउट कैसे उसको जॉब करेगा, तो उसका ये है कि दे प्रोवाइड एडिक्वेट ट्रेनिंग। वंस दे क्लियर द एग्जाम दे प्रोवाइड एडिक्वेट ट्रेनिंग। देयर आर वेरियस लेवल्स ऑफ ट्रेनिंग व्हिच दे हैव टू टेक अप बिफोर दे स्टार्ट वर्किंग ऑन दैट। सो ऐसा नहीं होता कि सिर्फ एक 12th क्लास का स्टूडेंट डायरेक्टली जाकर उसने एक काम स्टार्ट कर दिया, but there is a whole lot of training, on the job training, off the job training, and then they equip that person so that he or she can start his work in the most efficient manner. And second thing is, as far as your query related to the way the banks are calculating the interest rates, they are following the system that is all system generated. And आपने system में एक formula दे दिया, आपने entry कर दिया, वैसे ही आपका हो रहा है. So it is something which is not manual at all now. So much has evolved कि पहले आप हर चीज आप कैलकुलेटर पे करते थे और फिर जोड़कर उसमें लिखते थे. No, not this is not happening today. Everything is system generated. So you can rely and trust the system for that.
मैडम मेरा ये भी कहना है कि अगर मान ले वो जनरेटेड क्या ऐप बना दिया, उसमें आंकड़े यानी महीने दिन तो वे कैलकुलेट डालने होते होंगे, टाइप करना होता होगा, तो ऐसा
Yes.
तो कुछ रहेगा ना इसके अंदर? नहीं,
हाँ, उसमें सब कुछ इनबिल्ट है। आपका एक दिन का भी होगा तो उसमें इंटरेस्ट रेट लगेगा, एक दिन कम का भी होगा तो अपने आप डिडक्ट होगा। एवरीथिंग इज ऑटोमेटेड टुडे, नथिंग इज मैनुअल।
जी धन्यवाद मैडम, बहुत बहुत धन्यवाद।
धन्यवाद जयवीर सिंह जी. Now I welcome Dr. Sanand Shukla sir, please.
Good evening, sir. Good evening, ma'am. Wonderful presentation.
Thank you, thank
Of
you.
course, this is a very different topic for me, at least, because banking. I know banking because my daddy was a chief auditor in government service. So we are knowing about banking and the transactions and other things. We are well versed, how to make a DD, how to RTGS, how. But when it comes to this kind of, beyond banking and especially digitalization is there, it becomes, we should have some kind of, training or education regarding this. What you have done today, at least we got the index, right, to study. So I think this is a very new concept and new approaches. So my question is, what about the rural population? Urban population can be, can come across with this kind of things, and they can learn very fast. But nowadays mobile phones are there in rural areas, but teaching them this kind of finance and this kind of digitalized processes, how it will be possible for them, because many of the places the networks are not reaching. This is my first question. And second question is there any role of cyber persons during this kind of what we can say automatic or digitalized process? So is there any role of cyber person, and what kind of role they will be playing?
Okay, so let me just give an answer to the first question, that how we are reaching out to the rural masses. First thing is, over the years, if you see that the global internet connectivity has improved, and if we look at the data also, much better connectivity before, and since the last if you look at the last 10 years, much better internet connectivity we are seeing, so we are reaching out to them. At the same time, these fintech platforms are leading the way, because each one of us, whether we are living in an urban area, semi urban or rural area, each one of us today is having a mobile phone. So they are companies, these fintech platforms, they are talking about their products, talking about their services, spreading awareness among the rural folks, that how they can invest their money in, even in the stock markets, they can invest in other social security schemes and all. Apart from this, the government of India is also running various campaigns, and along with RBI, they are setting up investor campaigns in the rural areas. So there has been a change if we see over the years. And second thing, as far as the IT support person is concerned, yes, there is a growing demand for IT professionals today in the banking sector, because as I said, that there is a digital acceleration. We are no longer doing anything manually. We are simply relying on the system, and the system will be handled by people from IT only, unless and until they equip themselves, and any person equips with these IT, with them with the IT knowledge and all, they cannot survive. So banks or the NBFCs or any fintech platforms, they are working on IT support only. So there's a massive opportunity for IT professionals today. I personally feel this.
So I think that literacy, the financial literacy program, people comes, they are talking about for their benefit, or they are coming with some kind of, investment programs only. I think we
Yes.
should go with this kind of, training programs. And because, I've seen farmers and the rural people, they are investing their money in post and,
Savings, yeah.
Kisan Patra and all other things.
Yeah.
But I think they will get benefited with this much, but that awareness has to be created among the rural population. So that is the largest segment. I think 70% segment we can say, it is a rural area. So when we want to expand, when we want to expand this and we want to grow our economy, our country's economy, and we want everyone inside the economy, it should not be stored somewhere, but it should be rotated somewhere. So I think that will benefit everyone, each one of us. So with this, I will thank for your great presentation. Thank you very much. Thank you, Dr. Betkar.
Thank you so much. And I simply agree with you that a lot of initiatives the government has to take to spread the financial literacy. And this investor awareness programs, etc., has to be increased manyfold.
Even people will work like LIC agent or something like that, give them some remuneration for propagation of this, because that will really help and that will give a boost to our nation's economy. Thank you.
Yes, of course.
Thank you, ma'am. We are not from commerce and business management field, but faculties are mixed. But the topic was related to all. Beyond the banking, which sectors are coming ahead, private banking. Also, you have said about the foreign banking also, here are giving license. So, in all, these are boosting to our economy and making the process more easier. Those who are willing to take benefit from the bank in finance or any other. So, thank you for informative lecture. And also, the scope of this topic is how to digitalization banking, to aware about the digital financial literacy. So these things are very useful to us. And thank you to you for the best speech today, informative speech today. You get more information beyond the banking and other things. Thanks.
Thank you, sir. Thank you for providing an opportunity, and thank you for the audience for listening so nicely and participating in the session. Thank you so much. Thank you, everybody.
In future, we will be here on new topic related to your research. Thank you.
Sure, sir. Sure.
Thank you.
Sir, should I leave?
Yes.